I know a lot of you have heard me speak over the last couple days, so we wanted to have a little bit of the benefit of both a corporate update and then a bit of a conversation with Byron, because he's got some great advice. And I love talking about investing in the gold mining space as well, because not only am I a big investor in Banyan, but I'm invested in quite a few of other gold stocks. So it's something I'm pretty passionate about. And I think with this gold price, we are going to see more investment in the gold sector. Might not be instant, but I think it's coming. So you're looking at Banyan's project. That's 6.2 million ounces right there in the photograph. From the top of the hill there down through the valley is our Oryx Hill to Powerline deposit, and then in the front our airstrip deposit. What's really important in that photograph as a mine builder is the infrastructure. There's a main highway through there, year-round maintained roads. There's a brand new power line that was just constructed in January 2021, serves 2 mines, but it's only energized to half its capacity. They actually built with the future in mind. Cell phone service, fiber optic cable, all of that infrastructure is hugely important, not only for our costs of operating, but in the long-term capital costs if a mine is built. Also, really moderate topography. No mountains, no rivers, no glaciers. Lots of existing roads and disturbances. That's pretty important when you're trying to permit and build a mine. You know, we're in this Tombstone mine belt, and I think one of the themes that Byron and I are going to talk about is how camps are built and how you invest in areas which have the geological potential, the infrastructure, all the key attributes that you really need for projects to go ahead. And one of the key advantages we have is we're in this growing district, and there's already, if you were to draw a 50-kilometer radius around us, there are 18 million ounces, gold equivalent in ounces, in resources, all within road distance. And that is growing with what we're continuing to find, Victoria Gold and others around us. But 20 million ounces is kind of when you have a camp. And, you know, you look at the start of the Golden Triangle, Red Lake, all of these great gold camps really came about with initial discoveries, and then a mine gets built, and then often the other deposits follow with being developed pretty shortly after. Here's just the video. You know, we've got Hecla right beside us and Victoria Gold, so 2 permitted mines right beside us in this growing belt of new discoveries. We made our Powerline discovery in 2019. Victoria Gold's Raven deposit, super exciting, right across the valley, shows there's high grade. It's currently 1.1 million ounces at 1.7 grams, but I think their resource update that's coming based on their drilling last year will show it's much higher grade. Our Ormac property, 173 square kilometers, but within the district we have 300 square kilometers, and those important attributes, infrastructure, roads, hydropower, only 50 kilometers to the hydroelectric dam. This mineralization starts on surface, so low strip ratio. There you can see the block model of the 3 deposits from the resource we put out in May. Powerline and Oryx Hill are both sheeted vein deposit, lots of visible gold. You can count the veins, very similar to Snowline. Key difference from Snowline is we haven't found our intrusion yet. We are in the area around or beside the intrusion, which is actually pretty unusual. Having this large 5 kilometers of strike length is unusual for surrounding an intrusion. It means it was a very long-lived and big mineralizing system. Airstrip dips underneath Powerline. If we were to drill deep, we would hit Powerline or airstrip. But of course, an open economic pit is probably 200 meters. It's been a very rapid journey from our first resource in 2020. We put our head down during COVID, drilled 40,000 meters, came out with 4 million ounces in 2022, then drilled 50,000 meters to come out with 6.2 million ounces. So, you know, roughly 40 ounces per meter. $7.43 per ounce, pretty good value for our exploration dollars and for our shareholders. And, you know, I think that really shows you can add value in these kind of deposits and areas. We're putting together the right team, so we move into the next phases. Brought on Kai, VP of Project Development, brought on Brad and Mark Blythe, who both have a lot of mining, metallurgical experience as we move into the next phase. Great shareholders. Benefit from having our neighbor Victoria Gold, along with some pretty high caliber institutional investors, which don't generally invest in our market cap of companies, Fidelity and Franklin, and they did site visits. And I think that is something to look out for when you're looking for investing in gold companies. Who else has invested? Are they sophisticated investors? And another real key thing is, does management have skin in the game? I'm the third CEO of this company, so I'm a 4% shareholder, which means I've got around $2 million in cash, and every option I've ever exercised, I've held, even though I've had to pay the taxes. So I think that shows I'm pretty heavily vested in the best outcome for my shareholders. Got a strong treasury, $7 million in the bank. We've got a huge advantage in permitting in that we have all of the data from Victoria Gold and Alexco. That's years and millions of dollars of data. We did our gap analysis on that in 2021. Should we have a project, you would then go and make sure that you got First Nation support and you could start permitting immediately after that. There's no other junior project that is this ready to go. That's hugely attractive for major mining companies and even for our neighbors to know that there's a project that could go into the permitting process very quickly. We're the 5th largest open pit project in North America, with the potential, I think, to grow, to further up that curve. I believe we've got the potential for 8 million ounces plus. Puts us in unique category. That's something to really look out for. People will acquire projects simply for the scale of a number of ounces. So we've worked hard to position Banyan, get to that space where we are really a desired asset, over 6 million ounces with infrastructure, permittable, mines beside us. We'll have lots of catalysts into 2024. We'll announce our drill program and exploration program in a little while, probably by March, so that we have time to really use our data and design a program that's going to add the most value for shareholders. We'll have our metallurgy coming out, and we're in this great jurisdiction with great gold prices, so it's an exciting time to be talking about gold.
Well, thank you, Tara. Thank you, everybody, for being here. Thank you, anybody who's watching out there on YouTube or wherever we wind up broadcasting this. I'm Byron King. I am a newsletter guy. I'm a geologist by background and training. I've been to the Yukon many, many, many times. I love the Yukon and what happens up there. I love the geology. I love the sociology. I love the developability of the place. The newsletter group I work with used to be called Agora, A-G-O-R-A. We're Paradigm Group now, but I work with a guy named Jim Rickards, macroeconomist. And we look at the whole ecosystem of investing, everything from, electronic and paper gold way out here to gold coins at the coin shop down here. And, here we are in the middle with all the mines and the miners, the juniors, the intermediates, the big guys, the refiners, et cetera. If you really want to invest in gold, you go to the coin shop, you buy a coin, right? 999 gold and West Point Mint, whatever, Canadian Mint. Okay, yeah, great. Gold is doing well. It's over $2,000 an ounce US. But it's not really trickling down into the sector. There's a couple of companies that have done well, but the mining sector just isn't getting that love. Where's the love? Well, I don't know where the love is, but when the love comes, it's going to come big, because gold is strong. It's only going to get stronger, we think, in the macro view. With $1 trillion a year bill just to pay the interest on the U.S. national debt, this is not good for the dollar. Wars in the Middle East, the Suez Canal, the Panama Canal. We're looking at an inflationary environment. War in Ukraine is not going well for the Ukrainians. Losing wars is not good for a country, for a group, there's lots of macro reasons why gold's going to keep going up. So when is all that love for gold, the central banks that are buying gold, when's that love for gold going to translate into the mining sector? And you can't really look at the calendar and say, well, on this particular date, this is what's going to happen. But it's going to happen, and you want to be there before it happens. You want to head it off at the pass. So things that we look for, and Tara, we can talk about this, you see it completely laid out in front of you in a place like the Yukon. Beautiful geology, very developable. This morning at the Tombstone breakfast, we heard from the chief of one of the First Nations up there, who stood up and said, we want to work with mining. We want responsible mining. We want to bring this development in, environmentally proper, respectful of the First Nations, of the traditions, what have you. Yeah, I'd like to meet the person who says, no, we don't want to do that. Who would that be anymore? And so, yeah, you can do it in the Yukon. It can happen in the Yukon. And you've got this incredible array. But here's Tara, here's Banyan, with over 6 million ounces in the ground that we know about, on a road, on a power line, on a fiber optic cable, in a developable jurisdiction. But you look at the other array of companies out there. Maybe they don't have that many ounces in the ground yet, but they're drilling. You look at other companies, Snowline. They don't have a resource, but boy, every time they pull a core out of the ground, it makes news. So. Tara, why don't you add a few points to what I'm making here? I mean, I'm just reinforcing what you were talking earlier.
Yeah, well, it's both. Right now, the market is certainly rewarding new discoveries. You look at Snowline, fabulous discovery, actually, changing the paradigm of what the model is for these deposits, which applies to all of us. It applies to us as well. What's known about these intrusion-related deposits has been a little bit blown out of the water with the grades that they have. And, we're seeing those grades also, Victoria Gold, some higher grades right near us. So, generally these intrusion-related deposits are kind of under 1 gramish. And so, I think it's been hard to get attention in the market. New discoveries have been rewarded and are being rewarded. But I think at some point, you've got to have some of the discussion about which projects are going to move forward and where you can actually permit projects. And, Yukon's fabulous in that, we have settled land claims. We understand where First Nations we've got security of tenure. You're not going to lose your claims like in some of the areas like Panama. That's pretty scary to lose a whole mine. That's very, very unlikely. The world's a pretty bad place if that happens. It's something that I look for. Jurisdictional risk is a big issue for me in my personal investing.
Yeah, absolutely. A lot of people out here, you've probably heard of this thing called the Lassonde curve, where you have a brown stain on the hillside out in the middle of nowhere, and somebody finds something, and there's that excitement of discovery. Oh boy, everything's great. We're discovering, we're finding, this is great. And then you get to that sort of peak enthusiasm, but now you get to that drop off in terms of valuation. It's called the Valley of Death. I will have to walk through the Valley of Death before we get to the other side and we start to get into a production mode where you can actually ring the cash register. Back in the days when Pierre Lassonde came up with this Lassonde curve in his Valley of Death, the Valley of Death, where you had to get everything permitted and get everything financed and engineered and start your building and construction, your Valley of Death was 2 or 3 years, maybe 5 years. That was then. This is now. Your Valley of Death could be 6 or 8 or 10 or 12 years anymore, depending on the project. So in terms of what are you looking for to invest in for when things start to go back up again, you want to look at things that are in an advanced stage of permitting, things that can be financed, things that can be bought out by bigger companies who we'll let them do the work, but they don't want to start early in the Valley of Death. The big company, VRIC, Newmont, those guys, they want to get as far past the hardships of the Valley of Death as anybody else. So again, they're looking for logistics. They're looking, what's the amateurs talk about battles, the professionals talk about logistics. In terms of big companies, yeah, you can talk about, all the great science, and I'm a scientist. I love talking about great science. But if you're the big company, the big publicly traded New York Stock Exchange company, putting shareholders' money on the table, you have to be very careful about how much of that you put on the table when. And so you need to look at the developability, the logistics, and that gets into roads, power, permits, social license, things like that.
Yeah, and some people are the early phase of the Lassonde curve, that discovery phase, is a high risk but high reward phase of the curve. We see that not all discoveries will become mines, so many will have a peak and come back. Many will continue on that peak. There's also a big change in institutional investors, and I think following some of them also is a good strategy. And some of them actually invest during what you call the period of death because they actually like the torque and the certainty of knowing a project has an economic study on it, is partway through or all the way through permitting. And if you look at the curves of many mines when they go into production successfully, that's often even has more torque and is higher than the exploration phase. So I think Banyan, just to go back to it, I think I'm kind of a bit on both still. I'm still on the exploration discovery phase with opportunity to grow, opportunity to find higher grade, opportunity to find our intrusion, as well as on our other property. But we're also working hard to skip over and shorten that period for this project should it go into permitting.
Yeah, yeah. Again, you want to look at companies that can somehow have a shorter, bottom part of the Lausanne curve before they kick in, and you can be a producer and an explorer. Look at Victoria Gold, which is producing obviously, but they have entire new discoveries on the other side of the mountain there that didn't know about them, but now we do.
And their permitting process was 5 years.
Mm-hmm.
There are some jurisdictions in the United States where you have a very, very long permitting process. So, people say Yukon's process is long. It's thorough, but does actually have a couple projects that have been through in 5 years or less. And Hecla, of course, had to re-permit and took their project through. And they're brownfield, so they have done multiple iterations of permitting, but they have gotten permitted and are back getting that into production.
You want the process to have a beginning, a middle, and an end. And somehow or another, in many parts of the world, including many states in the United States, there's no end. Everybody can say no. Nobody wants to say yes. And so it drags on. And I can talk about projects in Colorado or Arizona that have been just decades in the pipeline. And it's like, when will this happen? Well, probably never, but never is a long time. We'll find out. Another angle I want to get into is that we mentioned earlier that the price of gold, for the first time ever, really, it closed the year 2023 above $2,000, and it's hung above 2,000 US, through the 3 weeks of January, and anything could happen. The price of gold could drop tomorrow and go back up, whatever. But so we seem to have a good solid base for it. And I mentioned earlier the rhetorical question: when are we going to see some love? In terms of mining investments, mining companies, mining shares, they're not just competing against other mining companies. You have a better discovery, you got more discoveries. You're competing against everything. You're competing against Bitcoin and crypto. You're competing against artificial intelligence. You're competing against Tesla. You're competing against NVIDIA. All the other things that are out there that people can do with their money. And you can't really change the mass of investor psychology out there unless a big event comes along. You could drill through solid gold, and you're not going to change the mentality of people who only want to invest in NVIDIA or crypto or something like that. But there's going to come a moment when those NVIDIA shares or those crypto shares blow up on people, and it's got, wait a minute, what's going on here? What do I own at the end of the day here? NVIDIA, they say, is priced for perfection. Well, where does that leave you? Well, it leaves you better be selling it rather than hoping that it's going to keep going up and do another triple or quintuple or something like that. When just a little bit of that tech money, this much of that tech money starts to move into mines and mining, it's going to swamp the market makers. You're going to see unbelievable gains, and so it gets back to the point of you want to buy when things are on sale, and in so many ways, so many mining groups are on sale. They've got great assets, great people, they've got a great plan, they're in the right place, the right locale, they're developable. Every company is different, but there are bargains galore out there, in my view, right now.
So how do you evaluate bargains? Because I look around and I own quite a few stocks that have booths here. Of course, my largest position is Banyan, but I believe you do have to have a bit of a basket of stocks. And, I look at management, I look at skin in the game, I look at jurisdiction, I look at geological potential, which is harder if you're not a geologist. Does it have the scale of resource to get to that developable phase? And I look at infrastructure, and then everything else. If it passes that, then I can look at everything else. But what are your criterion? Any others?
Well, it's much the same thing. As a geologist, you begin with the asset. You want there to be a pot of gold at the end of the rainbow, both figuratively and literally. You want there to be something there, and not just sort of geological vaporware. But then you look at the people. You look at management. Who are they? What have they done? Is this their first or their second or their third rodeo? Can they? Nobody can do everything. You can talk about somebody inventing a computer in their garage, but past the first point of putting a few things together in your garage, you better get some other people who know how to put things together and move out of that garage. And so, does management know how to attract good talent, good geos? There are exploration geos. You want to have good exploration geos. But past a certain point, you also need good development geos, and you need to bring in some engineers, you need to bring in some metallurgists. Later on, you need to bring in the right kind of finance people, the permitting people. Can management attract those people? Can they bring them in? Can they put them all together and build the kind of team that you need? And then the asset itself, the geology, it is what it is, except you keep drilling and you keep finding. Look at Banyan. I mean, you drill. It's almost a manufacturing process of drilling, based on the geology. You've got certain types of rock that you just keep drilling, you keep finding, you keep adding ounces, and so here's your 6 million ounces. And if you keep it up, if you drill more holes, the number could go up, right? Forward-looking statement, but the number. If you keep doing what you're doing, a lot of your past success very well could happen again. So a company like Banyan is right in the sweet spot, in my opinion. And I guess I should say I am a shareholder, but that only colors my opinion in the sense that I own shares because I like the company. I like what they're doing. But you've got roads, power, communications, you've got workforce, you've got First Nation agreements and such. You got a friendly jurisdiction in the Yukon. I'm waiting for. Is there what's wrong with this picture? Well, nothing. Nothing yet. Nothing.
Well, the market sentiment is so. Are you seeing more general interest or more uptake in your readers into the sector, or is it the same people that are still like? What's going to drive? You talked about a significant event. Is it going to be gold price getting over 2,100, like some analysts say? What's that event going to be? And are we seeing new inflows now?
Well, as a newsletter person, as a newsletter guy, you live and die by the clicks and by the opening rates of your emails and the notes that you send out to your thousands and thousands of readers. And what I can tell you is that the highest opening rates that we seem to have are for headlines or subject lines that say, 5 best gold companies right now, that kind of thing. So you can put out all sorts of other headlines that, you'll get your opening rate or whatever, but you'll double the opening rate on a good headline for mining companies, gold, silver mining in particular. So the people are out there. I'll say this about the investing community, that the gold investing community is a somewhat closed group. I mean, the tech bros and the Nvidia fans and the crypto bros, and there are a lot more of them than there are of us. Okay, and they've got a lot of money, but they haven't gone through the disaster that's going to come. They haven't gone through their own, valley of death, where the trillion-dollar company loses 40% of its market value, and in a matter of weeks or something, and they're sitting there holding the bags. They will. In terms of what's out there, you want to look at other. You want to look at other smart people. What are they doing? What are the central banks of the world doing? They're buying gold. They're not buying U.S. bonds. They're not buying treasuries. They're not hoarding bags of cash or pallets of dollar bills or $100 bills. They're buying gold. That should tell you something about where the trends are headed. You look at something like BRICS, the Brazil, Russia, India, China, South Africa. BRICS added OPEC to its group now. What are they doing? They're talking about a hard asset-based global currency. And you say, well, that'll be decades in the making. It'll be decades in the making, maybe. It could happen faster. But what they're not talking about is, more of the same. They're talking about going back to hard assets. And in that respect, hard assets are their day happened, centuries ago. Their day is coming back after this period of excitement in other things.
So the proportion of Western central bank buying versus, European, Asian, is there a trend, or have we seen Western banks pick up at all?
Oh, the Western banks, and this is me channeling my Jim Rickards, side. The Western banks are entirely ignorant of gold, silver, hard assets. They are terrible about it. But everybody else in the world, let's say the other 7.2 billion people in the world, their central banks are focused on hard assets. Picking China, India, big countries, but medium-sized countries. Countries like Egypt, countries like Turkey, countries like Poland, for example. They're buying gold for their central bank because they are not confident in the future. So that's good for the price of gold, and by extension, that should be good, for the price of people who mine gold, because a lot of that gold, the gold that goes to China, those atoms and those elements, those molecules, they're never coming back. Okay, if, when the Chinese import something like gold, sure, they'll export it in electronics, or maybe you can buy a gold panda or something. But for the most part, those tons and tons and tons of gold going to China are never, ever going to leave, not in our lifetime or in the lifetime of several generations to follow.
And our central banks, our Fed and the Canadian the bank, are trying to control interest rates to control inflation, and yet we have a bunch of people talking about interest rates coming off here, maybe even first quarter. But I think we're seeing a new wave of inflation. So I think that might be a little longer than what everyone's suspecting. And is that what we think is happening with the price of gold, or do you think it's bigger than that?
Inflation is a big part of it. Yeah, a year and a half ago, we had, in the U.S., we had the so-called, 10 and 11 and 12% inflation, which was government really massaging the statistics down by, say, 50%. It was more like, 20%. You can see it in the grocery store. You can see it in the price of a new car. You can see it in price of housing, things like that. So inflation is down, but that doesn't mean that in the U.S. we're now paying less than $2 a gallon for gas. I know I'm in Canada. Sorry about that, but it doesn't mean gasoline has gotten cheap again. It doesn't mean that the price of steak or the price of other good high quality things in the groceries. It doesn't mean that those prices have come down. Doesn't mean that housing prices have come down, rents have come down. Doesn't mean that at all. We're in an inflationary mode, and that inflation is stickier than you think. And so the U.S. Federal Reserve, and this is an election year in the U.S. too. So that they're going to do certain things to, help their paymasters, help the government in power. So we're looking at an inflationary time ahead, and in an inflationary time, you want to own the gold, you want physical metal, you want royalty companies, you want producing miners, you want the up and coming explorers, developers as well. And these are the kinds of things you want to be looking for in your in your investment.
How many junior stocks do you own, like in terms of a number of junior companies? Like how many can you watch? I know you have the newsletter, but personally, kind of what's your threshold?
Me personally, I probably own shares in, I'll just spitball it here, probably at least 25 different junior companies. The idea being that not all of them are going to be home runs out of the park kind of thing. Some of them are probably just going to completely crash and burn on me, dead money. But at the same time, some of these others, and I've had this personal experience for both myself, but for the readers too. I've recommended companies at 30 cents that became $6 companies, that kind of thing. Some of the small ones, the 30 cent. I have some 30 centers that I'm sure are going to be $6 or $8 or $10 ones. So right now, a company like Banyan is right in the sweet spot of it has everything it needs to do very, very, very well as things unfold.
Thank you, Byron. Really appreciate chatting with you today. I don't think I can handle 25. I've got kind of down in the numbers because it's hard to follow that many when you have a day job, but that's not newsletter writing. So thanks for your time and your insight. Look forward to seeing you back in the
Thanks, Tara. Thank everybody for being here. Thank you for watching out there on YouTube.